welcome. Thank you for watching. I don't quite know. Let's see, there are a couple of people watching at the moment. So could we sort of just get a little hello in the chat? There should be a chat on the, I don't know what the left-hand side of the screen is, but there should be a little chat box that you can chat in. So maybe just indicate that you can hear me, and if you can hear me clearly and that kind of stuff, that would be fantastic. Much of this does serve as a test to see whether or not this stuff works. And also just to explain a little bit around what I want to do and how I plan to do it, and all that kind of stuff. Looking good. All right, well, thank you, Anne. Appreciate it. So it does mean that it works. Okay, well, welcome to what is the first of, I hope, many of these types of streams. Basically, the purpose of these is going to be to provide some free education to traders. There's a lot of stuff out there that people buy, which some of it is worth it, some of it is not. So what I want to try and do is to put together a series of videos, or a course, if you want to call it that, that you guys can watch right here on YouTube. Once these videos are recorded, they will go straight to the YouTube channel. I think it might take a couple of hours to upload or whatever the case is, but they will then be available there for you to watch again and again and again. So as time goes by, there's a couple of things that I want to work through on sort of the channel, but also, you know, mainly I want to hear from you guys what it is that you want to learn. So in the comment section below, comment stuff. I mean, I don't know, I'm new to YouTube. Fair warning, I fiddle with random things I find on the table, so there'll be a lot of that. So yeah, leave comments, send emails, do whatever you like, so that I can get a good idea of what it is that you want to learn, because a lot of this stuff took a long time to learn, and there is a lot of stuff. I was having a conversation with somebody today. He's been pursuing trading for the last 10 years. And, you know, it's just an absolute mountain of knowledge that you have to learn. So what I can do is share the things that I have learned with you, and try and show you examples and that kind of stuff of how a lot of these things are done. You heard there would be cookies. You heard, I was going to say you heard right, but I don't have any cookies. I do have coffee though. Ha! But cookies would be good, man. You've given me a craving. So in any case, okay, so trading, what I want to do is I ran that poll on Twitter to see what it is that you guys want to learn, and I asked if you want to learn about sort of intraday trading skills, if you want to learn swing trading strategies, if you want to learn technical analysis, or if you want to learn psychology stuff. So the number one thing out of those four was intraday trading skills, but it was actually a fairly split pot, so it was fairly well balanced between the four things. So I think what I need to do is try to cover as much of those as possible. So what I want to be doing is I want to take Wednesday nights. I was thinking of doing half an hour a Wednesday, but I don't think that's going to be enough. I think what we're going to do is aim for an hour every Wednesday evening to go through some of these things, and we'll go through those sort of main points, and we'll try and spend a little bit of time on each, because I think that if I cater for just sort of the beginning entry-level technical analysis stuff, that some of the guys who are well-versed with that might not find any value in it. But if I also focus on just the psychology stuff, then the guys who want to learn about strategies aren't going to get any value in it. Well, they'll get value in it, they might just not realize it. So I think what I'm going to do then with the shows is I'm going to break them into sort of segments, and I'll spend a certain amount of time on each. All right, so Mohammed says that he is looking to improve technical analysis, position sizing, and trading psychology. Okay, cool. So maybe, Mohammed, give me an understanding of, you know, where did you learn about technical analysis? How much of it do you know? And where do you want to, you know, what are the things that you do know, and where do you think are the things that you have room for improvement? Position sizing and psychology go hand in hand. A lot of people believe that you have to trade big in order to make a lot of money, and as much as that is true, you can also trade relatively small and just trade, well, and over time you make money as well. So it's rather to accumulate small little profits consistently is often a lot more effective than swinging your big boy bat every now and then and trying to hit a home run every time. So also, just a general disclaimer before we go any further. I'm not wanting to position myself as some trading guru who, if you follow my system, you're going to suddenly just turn into a millionaire and sip cocktails at the pool all day and, yay, easy street, zero input and maximum output because this guy taught me his magic 3-step system that's going to make you money. The reality is that it does not work that way. It just doesn't. What happens is that you might eventually come to a 3-step system that works for you, and that is your way of printing money. But in order to get there, you have to have, I believe, sort of knowledge around 4 main things. Okay, so you need to understand technical and fundamental analysis. I group them together as analysis. All right, so you have to understand basically what you're trading and when you're trading it. Right. You need a strategy, a set of rules that dictates to you when you're doing what and why. You need to have an adequate risk management plan in place. And, a lot of people will rattle off, okay, the 2% rule or whatever the case is. There are many different ways of managing risk, and those effectiveness of each is determined, I think, more by the individual than it is by the actual system. And then, of course, there's the psychology of trading, which kind of ties everything together. Your ability to stick to your plan, your ability to stick to your boundaries and to understand what's going on in your own head and stick to your stops and that kind of stuff. And that all plays in the psychology part. And what I'm thinking is that, or what I believe is that you can't necessarily have just one system that's going to work for everyone, because every single person is absolutely unique. So if people want to trade successfully, you have to learn the base knowledge that you need in order to be able to understand what you're looking at, right, and do effective analysis. And once you've got that understanding of the market and the instruments that it is that you're trading, you then need to learn a lot about yourself. And then once you understand how you react in moments of pressure, or how you react under stress, or how you what sort of trading strategy works for you, because the 2% rule might be too boring for some, or they don't pay attention, or they take small positions and they don't watch them, and then they come back hours later and they never banked the money when they had the chance because they weren't watching, because it wasn't interesting to them. So that person might have to trade bigger. Someone else trades big and stresses out and can't sleep and all that kind of stuff. They might need to trade smaller. So every single person has a unique way of thinking and responding to different types of stresses, and therefore every single person has to essentially come up with their own trading strategy. So instead of trying to teach you a trading strategy, I'm rather going to try and give you the building blocks that you need in order to build your own trading strategy. And it is a vast amount of things that need to go into building a system that works for you, tailored around what your sort of personality is. And that, I think, is the main aim for these videos that I'm going to be doing, or that I am doing, because we're doing them right now. So it's going to be a long time, so be patient. And if there are things that you want to know or things that you want to learn, I think the structure of this series is going to be kind of like a 5-part structure. So we're going to try and spend some time on strategies, some time on the school of analysis, where technical and fundamental analysis falls into that, some time on risk management and some time on psychology, and then a segment to go through questions and answers, or questions that you might have, so I can try and answer them where I can. Okay, Rands and Cents. Hey, it's a cool name. I would like to step by step, and what goes through your mind, what you check before entering a trade, and what stops you, even when you have a trade that looks good. Okay, so what stops me from taking a trade when it looks good, and step by step what goes through my mind. Well, it depends a lot, really. So it depends on the time frame that I trade. If I trade like slightly longer term, sort of CFD index stuff, trade the S&P 500 or the US 500 CFD or whatever it is. That stuff is more technical based, and that is really kind of, it has to tick a lot of rule boxes in order to be a technical breakout or a technical trade. It has to have a trigger and a confirmation and all that kind of stuff. In the short term stuff, when you're trading like intraday, I don't know, you're kind of just reacting more to what the market is doing rather than planning too much. There it kind of depends a lot on, a very sort of just focused look at what's happening in the market and then trying to read what the price action is. So you don't really have too much time to overanalyze things. It's like, for example, a good example today was NASDAQ when it broke 3,000. I wasn't watching. Somebody in the chat pointed it out. We all kind of missed it. But from there, in a space of 10 minutes, it traded from 3,000 to 3,030 almost, and it ended the day above 3,000. So that break, for example, going into something like that, you'd be watching the level. You'd be sitting there, seeing there's a reloader, watching it trade the whole time and hitting into this level, and then eventually when it manages to get up and bid above that 3,000 level, then you can go along. I'm going to try and show you with like a 1 minute chart, if I can find one, what I mean. And in the longer term CFD stuff, and I call it longer term CFD stuff, it's not really, I guess, but with like the CFD stuff, it's really just it has to fix or it has to fit a certain set of technical criteria, and also there needs to be a sort of macro backdrop to it as well. So you can't, for example, say, okay, well, this looks really bullish, I'm going to take it, but in the meantime, interest rates just did something and the market is reacting a different way. So you have to keep it in context of both schools of technical and fundamental analysis. I don't know if I'm answering your question. I hope I am. In any case, so I'm going to show you a chart here. So for example, this is Naspers on like a 1 minute chart. Let's see what happens if I make this a line. So in any case, at 3,000, there was a bit of a level today. So this was kind of the open this morning, and then you can see it kind of like got stuck under this 3,000 level a couple of times. It started there, got rejected, tried to get above, got rejected, got sort of resistance here again, and then at this point there was a nice break and they just sort of stepped in and bought it all the way up. So in a situation like that, you want to see really just whether or not 3,000 holds, and how the buyers and sellers interact with each other around that area, and you do that by looking at the just the price action, looking at the volume in the market kind of thing. In any case, so now I think I've drifted from my point here. So yeah, 5 segments. In each segment we're going to cover a bunch of different things to give you some idea of what the general outline is, and what each of the different topics is sort of about. Like I've written down some stuff here. So see them almost as 4 pillars that you need in order to be able to do this correctly. So you need fundamental and technical analysis is one pillar. You need trading strategy being another pillar. You need risk management and psychology, each being in their own pillars. And fundamental analysis is basically the study of both the micro and macro factors that influence a particular share or country or whatever the case is. So if you're looking at a company itself, you might want to look at, like let's say for example, you look at Sasol, you might want to look at the market in which it operates. So you look at oil, you look at plastics, you look at all the various products that it sells, how those things are trading, what the supply is for oil. For example, what OPEC does could have a severe impact on the oil price, which of course is a major factor for someone like Sasol. Then there's also the micro stuff, like are they taking bribes? Are they, this is the news that came out today, why the share was under so much pressure, because something happened within the company itself. How are they doing? How are the financials looking? How are earnings looking? What is the earnings forecast? What is the market expecting? All these sort of internal things, labor unrest. Those are the fundamental sort of things that you have to understand a proper picture of the company. And then from there you can go into technical analysis, which is sort of loosely defined as the study of trends and turning points, right? So you look at where what the market trend is, you see if you can identify that, and then you look to find entry points to ride with that trend, or turning points if that trend is perhaps turning. So I'm getting messages from someone. So you have to sort of use those two in combination. I don't believe you can use one or the other. I think that sort of old school thinking around only fundamental analysis works, only technical analysis works, I think that is incorrect. I think that these days you have to use both, and most people have the tools to use both now as well. Technical analysis, sorry, I keep bumping the table. Technical analysis is becoming more important because more people are using it, all right? And it's kind of like a self-fulfilling prophecy. Then in terms of trading strategy, I mean, we all know what that is. It's basically just a set of rules, okay? So it's a number of factors that you combine, if this, then that. And we can look at different strategies, different ways of skinning the cat, we can also investigate different ways. So if you perhaps have a trading strategy, we can look at that kind of stuff. We can there's a couple of strategies that I've written down over the years. There's like a probability arbitrage strategy that it actually works pretty well. I mean, it takes monster drawdowns in the bad times, but it actually performs pretty good. Then there's like a breakout strategy, or a sort of a momentum-based strategy, or whatever. There's different ways that you can build strategies, and I'm going to lean a little bit on what Mike Bellafiore wrote about in that book, The Playbook. It's a good idea to keep a record of the different strategies that you have, to sort of write them down, make sure that you understand. You print them on, you put them on your desk, or stick them to your table, or stick them to the wall, or whatever that it is that you're looking at all day, other than your screens. And then you can track the progress or the success rate of these individual strategies. And then from there you can see which ones work under which circumstances. And then when you have a sample size of enough, so let's say, for example, you build an opening range strategy. So an example of an opening range strategy is the Aussie opens at 8:30 in the morning, and then from 8:30 to 10 o'clock, you allow it to kind of just get through its morning jitters. It forms a range, a sort of big trading range. You measure the top and bottom of that range, and then if it breaks out the top, you measure the range distance and you project it to the top. And that is your breakout target. If it breaks out the bottom, then the same, stop loss in the middle of the range. That is a strategy that is mostly effective. It doesn't have the best win rate in the whole wide world, but it is, it can be done successfully. So you would write that down, and you would trade it every morning and stick to the rules furiously and track its progress, and then see from there, how does it perform, how does it not. If it's doing really well, you can maybe increase the exposure you take per trade. If it's not doing well, you decrease the exposure. If you look for like a breakout strategy, or whatever the case is, if you take a bullish breakout in a downtrending stock, how many times does that work? If you take a bullish breakout in an uptrending stock, how many times does that work? Write down the results for each one of them, and you build like a playbook, right? So you have a set of different things that you can do, and these are all the ones that work better, these are the ones that work worse, and you've learned under these circumstances, when the rand is weakening, these types of setups work better. When the rand is strengthening, these types of setups work better on these instruments. It's important for you to collate all that information and look at it, and then from there build a playbook that that's sort of personalized to the way that you trade, and also what's happening in the market. I'm going to read some comments here. Looking at users' trades and breaking them down might be interesting. Yeah, I think so too. I'm working on taking emotion out of trades. I tend to hold on to losers and don't exit good profit margin expecting more. Okay, so all right, I'll get back to that in a second. So to show you a good example of a sort of a breakout strategy, or of that range trade strategy that I was talking about, that morning opening range thing. My computer's brain is working a bit hard here, so give me a second. Come on. And then, no. So we got an opening range here to, where's 10 o'clock? So that's 10:15, so that's 10. So there's your opening range, right? So that was the high and the low in the first hour, because this is the 10:15 candle. So the 10 o'clock candle was this, this one here, that little hammer looking little duty over there, right? Turn. I don't know how to turn the crosshair off, so whatever. We've got a crosshair. So in any case, so you can then basically put your stop loss smack in the middle of this range. Plonk it there, and you measure this range. Where's my measuring tool? Ruler. You measure this range out, and you put your target down. And if you get a close on a, this is a 15-minute candle, if you get a close below that, which triggered to you on this candle here, I mean only just, but it closed below, that's your short trigger, bang, 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 and you actually managed to take your target. So that was today, and it worked well. I didn't trade it, just full disclosure, but you know, that's the kind of setup that you can do with something like an opening range trade. It's very simple. It's very easy, and it is relatively effective. It doesn't work all the time, so be sure to stick to your stops, but it's not a bad idea to you know, trade it every morning and then to track its results. You could even kind of trade it on a demo if you want for 20 days or a month to see how it goes, and then from there, if you feel comfortable and confident in it, then you can trade it with real money. Obviously, you know, I don't want to encourage people to take excess amounts of risk. The key to trading is survival, right? So I would encourage you to test new ideas in the sandbox before you implement it in real life. Okay, so how do you keep emotions out of trading? I don't think you can. This kind of falls into that trading psychology thing. I honestly don't think that you can keep emotions out of trading. Maybe it's just because I'm an emotional guy. I'm not quite sure. I'm just going to switch this back. Maybe it's just because I'm an emotional guy. I'm not 100% sure. But what I do think is that you can learn to manage your emotions. You can learn to understand your emotions. I did some stuff with a performance coach where, and it was hard, hey, wow, I won't lie, where we worked through, she's basically a psychologist, and we worked through some stuff where we tried to identify the first time I ever felt a specific emotion, right? So there's certain feelings that you get. For example, if I can just imagine here for a second, you're in a situation where you say you hold on to your losing trades, and you hang on, you say, so you don't exit on good profit margin. Okay, so you don't take the money when it's there, and you don't and you hang on to the losers, right? So what we have is this. There's a couple of things happening simultaneously. One, you've done a lot of work, I'm assuming, to build up to entering into that trade. So there's been some analysis or some reading or some whatever, or you've taken risk and you feel that the risk that you've taken needs to like reward you, and the work that you've done has to pay off as well, because what we've been taught our whole lives is that the harder we work, the better we do. And unfortunately, that's not always true. So we have this thing with like, okay, I've done the work here. I've worked hard to get the money to put at risk. I can't be wrong. I've done the analysis to this chart. It has to go down. I can't be wrong, because we're taught that being wrong is wrong, rather than being wrong is like normal. And the idea is not to be wrong or right, but to be profitable. So What I do in a situation like that is, in working with this performance coach, and I'm not a psychologist, but I can share some of the things that we work through with you, and I'll try and do that in the segments as time goes by. But basically, what I have to do in a situation like that, where I'm sitting in a trade, it's going against me, it's not working. I have identified with her help that I am a very rebellious person, right? I've been fired a bunch of times as well, so that all suddenly makes sense. So because I rebel against authority, I don't like being told what to do. I'm very independent. I'm very sort of like strong-willed, and I'm going to do things my way, or I'm not going to do them at all, kind of thing. So when I'm in a situation where a trade is wrong, I'm essentially rebelling against the market. So I'm going, I am right. I will show that I'm right, and the market is wrong. And that is, in essence, a sense of rebelling against something telling me what to do. The market is telling me, close your positions, dude. You're on the wrong side. You're going to die. And I'm going, I will not, because you cannot tell me what to do. And when I'm in a situation where I'm in a losing trade and I'm starting to squirm a little or whatever, I have to then ask myself, am I rebelling against being wrong? Or do I actually have a real intuition or a real slow burn feeling that this is the right thing to do? Am I in the right trade? Or am I just being, the YouTube guidelines said you shouldn't swear, but am I just being an asshole and hanging on to a losing trade for no reason because I can't accept that I'm wrong, right? So that, I think, comes with a bit of self-awareness. And the same with the winning trades. You've got money in the bank and you think, yes, man, this thing is going to keep going. And it doesn't. And then you sit and you watch that winning trade turn to a loser. So that is also a tough thing to overcome. I think a lot of the time there kind of can be described or boiled down to the fact that, okay, well, that's maybe not a fact, but I think that people have basically two prime emotions from where everything originates, which are essentially fear and greed, right? So everything that we do is motivated by one of those two things. I don't want to go too much into this, but like you say, okay, love is not fear or greed, and people do things for love. But a lot of the time, you love someone because you're afraid of being alone, or you're afraid that they will leave you, or like a lot of that stuff can be brought down to greed. Like you want another person in your life because they make you feel good, right? You want to help somebody else because it makes you feel good. So greed is an incredibly powerful force, basically, and that is what gets you in a situation where you are in a trade, you're in the money, and you go, I think it's going to go a bit more, and that's just greed, and it's hard to fight, and don't get me wrong, I'm not judging or saying is a wrong way or right way. There almost isn't in any aspect of life a right or wrong way of doing things. There's just a way that works and a way that doesn't, and that is completely individual to every person, right? So in any case, that again, like if you're watching the trade and it gets to a point where you start feeling like you have to take the money, you have to ask yourself again, I have to ask myself again, like, am I fighting what is obvious in front of me because I've got some sort of underlying motivator that I want to fulfill? Because basically every trade that you open or close, or particularly when you close them, gives you an emotional response. If you win, you have an emotional response. If you lose, you have an emotional response. So another emotional thing for me, a big theme for me, for example, is avoidance of regret. So you might not want to close that trade, or in my case at least, I wouldn't want to close that trade because I'm avoiding the regret of leaving money on the table. I'm avoiding the regret of like, holy shit, this thing kept going and I could have made 10 times more money. And that feeling of regret is almost worse for me than that feeling of losing a trade, right, or losing money. And for that reason, I'd stay in a trade longer than what I should, and then watch a winner turn to a loser, and then bloody regret it even more. So what you've got to ask yourself in that situation is like, what is going to feel worse for you? Is it going to feel worse for you to watch a winning trade turn into a loser, or a winning trade come to break even? Or is it going to feel worse for you if you close the position and it keeps going in your favor? If you close the position and it keeps going in your favor, yes, it's going to feel cuck. But, and if ever any kind of international viewer watches this, cuck means shit. So if, in any case, yes, it's going to feel bad if the position is closed and it keeps going in your favor and you're now no longer on the bus, right? But what's going to feel worse? In the short term, yes, it's going to feel bad, but in the longer run, is it going to feel worse if you end up losing money on a trade that was good, or is it going to feel worse making, just not making enough? And once you answer that question, I think then you'll probably come to the realization that, hey, it's time for me to close the trade, right? What is the moving averages that you use? It depends really. The ones that I have on this chart on the here, this is a 50, a 100, and a 200-day moving average. So green is 50, red is 100, and 200 is the blue one over there. I kind of use them on most of my stuff. The 721 is also quite nice. Yeah, I mean, moving averages are cool indicators and stuff. I also quite like the 89-day and 200-day moving averages. It depends on the strategy. Every strategy has a different way of, different indicators. So, for example, a nice way to look at, to find long-term stocks that might be trading or might be changing direction, you might be looking for a 50 and a 100-day moving average while the price is under the 200-day moving average, for example. That could be a medium-term bullish reversal signal, or vice versa, obviously, if it's bearish. So that kind of stuff is nice to filter through the market if you have software that can scan. So it depends really on the situation. I think a lot of that stuff is strategy dependent as such. So I think we'll probably end up covering quite a bit of moving averages and that kind of stuff a little later. Okay, so rands and cents. Today I entered short LHC at 27.35, stop loss 28.90, TP 23.55. We'd be interested if we have time to get yours. Unit use weekly chart. Okay, let's have a look. LHC. Hello there, Tiggery. Hey. So Tiggery is a cool guy. Well, Leonard. It's funny how you get to know people on the internet and then only much later learn their names. Okay, so you're looking at a weekly chart. Dun, 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 dun. I got that song in my head now that was playing. Okay, rands and cents. Let's see. Forgive all my tabs at the top. I thought I could trim them, and I mean I probably can, but I'm too lazy, and whatever. I'll probably trim them at some point. But okay, cool. So is this the chart that you were looking at, all rands and cents? Entered a short on LHC. Okay, let's see if I can draw this. All right, at 25. So this is basically what it is here. Wait, this is not a long position. This is a short position. I need to sit up straight. People always tell me that. Boom. Alright, so what are your things here? Coordinates. Stop loss level 28.90. Oh wait, no. Anything else? 28.90. Profit level 23.55. Kapow. Okay, so that's your trade there, basically, hey? So again, okay, so this depends on your time frame. What I would say here is maybe your stop is a little tight here, because if you look at where the previous high is on this chart, I just ignore these wicks for the most part. I see them as really kind of just noise. if I am allowed to say that. So I would draw, yeah, I don't know, looking for a trend line desperately, but I don't think there is one. So what's interesting here is you might have a double bottom kind of situation happening here. So that is a distinct possibility. So I'm just going to put that in. You might have a double bottom situation happening here. But as you point out here, it is actually trading in quite a nice range. This was a range resistance level here. It was a resistance level here. Here it kind of spent some time above it, was support, turned into resistance once more, resistance again, and now we're back at that resistance level. So, you know, be ready for slippage through this level here, and if we see historically the level to which it can slip, I think your stop might be a little too tight, and what you're trying to get here is you're trying to get a 2-to-1 risk reward ratio. What I would do perhaps is look at like a daily chart, right? And then you can see when it gets to the levels sort of here, there's consolidations, right, on a shorter term time frame. So it comes down and consolidates off this level, and then you can trade to the next level. There was no real opportunity for it here, but again, consolidated off the bottom and then traded up to the top. So I would maybe wait for a consolidatory type move, and then break that, and then rather trade like that little consolidation. So yeah, okay, you don't get the whole move. You're only now maybe going to get like that portion of it, but it's a much safer trade than this thing slipping out, testing these highs, stopping you out in the process, and then coming back down. All in all, I don't think it's a bad trade. I think there is obviously a level here, but I do think that there is a possibility that you're going to get taken out, and then perhaps it comes back down. So yeah, and also, I mean, there might be the chance of a trend reversal. Overall, the trend is obviously down, so I do think that you are on the right side of the trend if you look at least over the last couple of years. I mean, since this goes back to 2015 and we're still trending down, so we've got a bit of a support. So sure, okay, the trend is down, you want to follow the trend. But if you're then trading on a trend following strategy, then perhaps your stop is a bit tight, because on a trend following strategy, there's your trend line, right? Oh, almost lost it. There's your trend line on your trend following strategy. So you should be looking to enter either closer to this trend line or have a stop loss above this trend line, and then you're trading with like a much larger, longer term trend. And how do I make this? Come on, you bastard. And then you're looking maybe for targets further down here. Yes, I mean, you think it's impossible, you think it's crazy, but it's not always. Hey, I mean, you look at something like Brate and you think, how much further can it go down? And then it just doesn't flip and stop. That's kind of scary. In any case, so yeah, watch out for double bottom here. Don't be stuck too much in that like mindset of it's bearish, it's bearish, it's bearish. I think that trend line is going to be a big thing, especially the time frame here. It's daily, so you're going to have a very long time to make a decision to see whether or not this trend is changing. And if you look at the weekly as well, you've got kind of all the time in the world to make a call, whether or not this trend is changing. But that's definitely your downtrend. So you're trading with the trend. I think maybe your top might be too tight, but I really can't be sure. I mean, I think that's more the level at 30, and I think that's even the range really is more from 23.55 to 30 rand rather than this 27 to 23 range is what I think. So maybe I think you're a bit soon on this, but let's see how it goes. I could be wrong, but this actually does look kind of bullish. That's quite a bullish. I don't know. We'll see. Long wicks and tails on this thing. It's not very liquid. In any case, okay, sorry if I was inappropriate or dumb question, but I don't understand the sense after hours. Oh, it's like freezing the market hours. Oh, what? You don't understand the sense of after hours. Why are they like freezing for those hours? Oh, right. Okay. So I think I understand what you mean. So the markets close. They have to close. So in the US, there's after-hour sessions where you can trade after the market's closed. In South Africa, the market runs from like 9 o'clock in the morning to 5 o'clock in the afternoon, and after that, people want to go home, so they close the markets. Everything stops until tomorrow morning. In the US, there is a pre-market and an aftermarket, which is I'm not sure exactly the time frames, but I think it's about an hour or 2 hours on either side of the market opening and closing for the people who are super eager and want to get there early and stay a bit later. But they also have sort of an open and closing time. Okay, cool, no problem. Okay, yeah, cool. So I think for the rest of this session, I'd like to hear from you guys a little bit. What are you up to? What are you thinking is gonna? What are you thinking is the sort of plays for you this year? What do you expect from this year? What do you expect from the next kind of calendar month of markets in South Africa? Or not calendar month, calendar year. I mean, what is have you got any kind of trading plans, longer term views? I want to get a sense almost of what the general feedback is out there, because it does seem that most people are turning bullish, actually. I'm looking for something. There we go. So yeah, I mean, I'll talk a little bit about what's been happening. Volume is still somewhat low in the US, and I think that this Theresa May story caught everyone off guard yesterday. I don't think that people were surprised by the fact that the her deal was rejected, but I do think that people were surprised at how the market reacted. Well, I was surprised at how the market reacted. I thought the market would come down because of hard Brexit, but turns out, it was pound positive. So, I mean, who knows? At least I think it was. Sorry, I need coffee. And that's actually what I want to show you. I'm just waiting for a platform to open. But it is taking a bit longer. So I'm going to try and use a different chart for it. In any case, okay, so any kind of questions up to this point, ladies and gentlemen? We've been going for about 40 or so minutes, so I don't want to bore you too much, considering I don't really, I'm not going to be covering like real content kind of stuff tonight. Really, it's just a sort of intro session, and I guess like a bit of an AMA. You guys are welcome to ask me to have a look at charts or ideas or trades and that kind of stuff. And I'll give opinions if you like. I do sometimes trade Forex, yeah. I mean, I wouldn't say I'm a Forex trader, but I mean, I trade charts, right? Forex have charts. So, so yeah, from time to time I would take a currency trade. It depends. I mean, I've traded the rand quite a bit, but I don't necessarily trade it all the time. Any trades I'm looking at the moment. So yeah, this is actually what I'm doing. So if ever this thing decides to load, see, that's what I was asking about. I need a beast of a computer. Dun, da, 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 because my computer, she's struggling. You know what I found about investing.com the other day? They had these disgusting overlays where you can't see them, but if you click on anything, it takes you to FX Pro's website. And I was like, what? That's disgusting. How can you do that? Okay, so anyway, this is just off investing.com because Interactive Brokers is taking forever. So basically, what we have here is coffee, or instead of trading coffee futures, this is the iPath Series B Bloomberg Subindex Total Return. All right. Coffee Subindex Total Return. So basically, what this is an exchange traded note on coffee futures. The underlying investment of this ETN is a future contract, or is futures contracts on coffee. So there's a number of things. Now I saw it was news in the week. Twitter was going, I was like going crazy, but it was on my news feed about. I just need to have a sip. Hang on. About how coffee plantations and people in Brazil are going out of business because the price of coffee is so low that they can't make money. Well, welcome to what happened to oil a couple of years ago. Oil price was trading, what was the low? $25, $35? I don't know, somewhere around there. The low was almost worthless. Nobody wanted oil. It was kind of, everyone was just rejecting it and whatever. So what started happening is people start shutting down oil rigs because they get to a point where they are no longer profitable. It costs them more to produce oil than what it does, than what they can actually sell it for. And welcome to coffee, the coffee market currently. Right now, if you plant coffee and you harvest it in a year, you're going to make less money than what it's going to cost you to plant and grow that coffee. So what's going to happen? Same thing that happened to oil. People are going to shut down their, well, not rigs, but they're not going to plant coffee. So we've had the world's biggest on record ever coffee harvest not so long ago. And this has brought the price of coffee down a whole lot. So I'll give you perspective. I think it's KS. KC. US coffee futures. All right, so these are the futures. So I'll just give you some perspective on where the price comes from. Okay, so 2014 coffee trading at 222, currently trading at 102. So it is down in excess of 50% from the highs. Go away, I don't want to see these things. And I mean that is pretty huge, right? And we can see that it has a somewhat volatile nature. If we go back further, we see that it was even higher, right? So it was trading at 300 in 2011. So over the last 8 years, it's come off 66 odd percent. I mean, it's a third of its value, right? So these future contracts are disgustingly big. So because they're US listed, commodity futures contracts. So the more affordable way of trading them is to do it on an ungeared basis, which is by trading this Joe, right? So it's an ETN that you can buy in an offshore account. You buy it cash. You don't have to gear it, and you can basically get the return that you would get on the coffee future. Just you don't have to take like a $50,000 contract on the on the exposure. So it's a fairly new listing or whatever the case is. But what we are looking at here is a situation where we have like it's cost more to produce coffee than what you can get for it, which means that coffee supply at some point will start coming offline. So this might not be the bottom for the coffee price, but I do think that we are nearing the bottom of the coffee price, and this to me spells a trading opportunity from a medium-term perspective. So you could start, I suppose, well, actually I have an FSP number, I can say that. I would start buying some of the stuff. In fact, I have started buying some of the stuff on an offshore account, just on the ETN, ungeared, and just wait for it, because I think that over the long term, and I'm talking many, many months here, this thing is going to go, you might be looking at a similar trade to what we had in oil. It took 2 years. We had sort of like a 300% move, 200% move. I think we can see a similar thing from coffee. So that's one of the ideas that I have at the moment. Unfortunately, I don't have many sort of like shorter term CFD ideas at this stage, just because, I don't know, the market is really wild. So I'm trying to trade kind of like intraday when there's opportunities, or slightly longer term. Although, you know, as and when ideas come up, I definitely will share them with viewers on this channel. So yeah, coffee. Look at it. If you want more information, I guess pop me an email or whatever the case is. And but I think there's a pretty compelling investment case here to get into these. If you do need, yeah. Anyway, I'll rattle my tin can later. Okay. Do you trade trading like at the moment? Intraday trades. What timescale do you tend to use? Okay, so I'm going to answer that one. I'm just going to go one by one. Timescale is hard to call intraday. Simply because they're, I mean, from a chart perspective, I guess a 1 minute chart or technically a tick chart, if your platform can do that, not many can, but tick charts are good, or 1 minute charts are also good. Ultimately, you're watching price action, so you're just watching the bids and offers rather than watching like the actual chart. Sorry, I'm just pulling up something here. I'm just going to go cancel and cancel, so can't see nobody's things. Okay, so if you look at something like this, for intraday trading, what you're basically doing is you're just watching, or what I'm doing is just watching the bid and offer screen. So this is the central order book for LHC, and you can see here the bids, the offers. Okay, so it's after hours now, so the only bids and offers that you see here are the ones that are good till cancelled orders, basically, because all the end of day orders sweep at just after 5. So in any case, so you're basically just watching bids and offers. Where is it? Yeah, bids and offers, and you're trying to see, and the tape, right? So here you have the last 3 or the last 20 sort of trades, and in this window below where my face is, there is a longer sort of history that you can scroll down of all the trades that went through. You won't be able to see them because my ugly face is there. But basically you're watching that. And then here, this is a 1 minute chart because it's the shortest time frame that this platform can do. And you're just kind of watching the interaction between the buyers and the sellers. So here you're looking for price action stuff, which is I guess something that we'll have to cover a little later on. I'm a trend. Okay, Mohammed says I'm a trend follower. Generally trade daily and weekly charts. Only trade long and like to trade above 50-day moving average. All right, that's a good set of rules. Tips on how I can tell when it is a fake break above the 50 MA. Okay, so you tend to trade daily and weekly charts. So when it is a fake break, so you need to wait for a candle close. That's kind of the only thing. But we saw in that LHC example, it closes above there for a couple of days and then it comes back down. So I guess that's really hard to tell. You know, I would say you could be a bit more reactive and watch some price action, but you don't. It doesn't sound to me like you have time for. It's kind of like watching price action. So I don't know. It's a tough call. I mean, I'll think about it a bit. The best thing to do is to kind of wait for some sort of like, you have to set up a set of criteria that gives you confirmation that the actual opportunity is a real one and that it exists. Because yeah, so I mean, especially with weekly stuff, I know that people tend to get sucked in before the candle closes. You know, the weekly looks good, but it's only Wednesday, so you take the trade. No, you can if you're trading a weekly candle, you take the trade only on Monday after the Friday close. Monday you take the trade, right? And the same with daily. If you can sometimes, if you want to be a little cocky, buy in the closing auction on the day, but then you're helping form the candle instead of allowing the candle to form naturally by itself, and then tell you what to do in the morning, right? But for most of us, I mean, it's not like we can push stocks up in the closing auction, and you know, most of us don't trade big enough. It's usually the realm of the fund manager. But how to tell if it's a false break above the 50 MA. So let's look at stuff. Okay, so let's put on a 50 moving average. Right. I'm gonna make it a 50. Pow. Okay, so this is a weekly candle. So I'm looking at Vodacom because you also asked about Vodacom. But I mean, maybe just giving some context of your question here, because this is looking like it's approaching the 50 MA, and what you're afraid of is taking the long when it breaks above here, and then that's a fake breakout, right? I'm assuming that's what you're thinking here. So the first thing that sort of stands out to me is that we have like a level here, right? Right here, pow. So I wouldn't enter a trade until I have a time frame, quote unquote, close above that level. So if that's a daily or a weekly time frame, I would want to see it close above that level. And you can see here how it's kind of played around with this thing in the past. So I'd wait. It's 140 Rand. I'd wait for a weekly close above 140 Rand before going long here, because technically you are kind of playing against the trend. We've got a high, a lower high, a lower high that's being formed here, a lower low and a lower low, right? So this is definitely a change in trend. So something we'll cover as well, Dow theory, okay? Everybody's like, oh, it's a bear market because it's down 20%. That's not exactly what the Dow theory states is that if both the industrials and the transportation average both make two consecutive lower highs and lower lows, it's a bear market. So if you take, that sort of market specific thing out the thing, two consecutive lower highs, lower lows is a bear market, right? So here you have lower low, 1, 2, bang. So the trend is down until you have a break of this. Until you have a break of this resistance level, which is going to be here, the trend is going to remain down. Okay, so we might see that it flirts around with this. So it could sort of flirt around here for a couple of days, and then continue down, or you could very well have spotted a very well-timed trade, and this thing could be up. But whether you buy it at 137 or at 145. If your target is 180, it's not really going to make that huge of a difference, right? Rather make a little bit less money, but know that you've got momentum behind you, and be a little on the safe side. So it's hard to know if it's a fake breakout, and I see that this does it a lot. It does it a lot. So yeah, wait for the candle close above that resistance level is what I would do. In this particular case, and I think that maybe the key here is like nothing works in isolation, right? So yes, technical analysis works, but you need fundamental backing. Yes, candlestick charting works, but you can't ignore other indicators. Nothing works in conjunction. People tend to believe that if they follow some sort of a technical strategy, that if this then that, if this then that, it works every time. It's not the case, right? All the technical indicators are telling us is they're not giving us signals to buy and sell stuff. What they're doing is they're interpreting market data and turning it into information and telling us a story. We can then use that story, that information, to then make a call on what we believe is most probable of happening. The stochastic moving up through 20 is not a buy signal. What it shows is that momentum is starting to come to the upside again. It doesn't mean buy it, right? It's us that place this rule on it. Says, oh, if that happens, then you have to do this. And it's not always, it's not always that simple. You've got to keep it within context, and you've got to understand that the indicators aren't telling you what to do. They're interpreting market data for you and turning it into something useful to you. So what we want to cover what I want to cover in technical analysis stuff is how do the indicators work? How are they calculated, and what are they actually interpreting, and what are they actually telling me? Because I find that understanding that stuff is is a lot more helpful than kind of just blindly following the stuff. In any case, so yeah, this chart, I quite like it. I think that you actually have a potential sort of medium-term trend change scenario in your hand here, because if this trend does break, it's going to, well, in theory, it'll find a bit of resistance here at 168, 170-ish, and it'll find a bit of resistance here at 156-ish. But in theory, this is a very, very nice trade. I quite like it. I just am a little wary of this level because, as you can see, it was strong support. They smashed it, came back, turned into resistance. So let's just see if it's resistance here or not. It might suck in a whole bunch of bulls tomorrow morning because it's broken this level here, broken this trend line. Everyone's all excited. Yeah, it's going to go. It might not. So let's just be careful. At the moment, US is trading higher, so I guess that is good. Rand still sort of 1369-ish, so it seems as though we probably have another strong day or two ahead of us for the rest of the week. But let's wait for the close above 140 Rand. I think would be your safe trigger, right? So the idea is to take as little risk as possible to make as much money as possible. So always rather miss trades because you're extra careful than be in every trade and then see your backside. 50 SMA close and daily chart. Okay, it has already broken the 50, consolidated above the 50 and broke out today as well. So this is your 50 sort of MA on the daily chart. Yeah, okay. So, you've got okay, consolidation, closed above it, and it's breaking out. Just watch out for overhead resistance. All right, yeah, guys, and that's an hour, hey? Can you handle it? That is an hour. Dunsies. So I'm going to wrap up, I guess. I hope that this is, or has been informative. I shouldn't do that. Sorry, I'm using the sort of weird functionality. I'm also learning. I hope that it's been sort of informative for you, and I hope that you have a better idea of what it is that we're going to cover. If you have questions, please comment. If you like the stuff, like the videos, subscribe to the channel, do all the things. And please don't be shy to use the comments, because if you don't comment on stuff, I won't know what you're thinking, asking, doing whatever, and we can have conversations there. And it sort of just helps me understand stuff. Ultimately, the plan here is to help you understand this stuff better, and to help you sort of gain a bit of sort of educational knowledge, and not to kind of tell you what to do. I'm not here to tell you do this, do that, you're going to make $1 million. I'm here to help you learn how to do this in such a way that you are able to do it successfully. Because the reality is 80% of people lose. Eh? The difference between those who don't and those who do is not so much, I suppose it is a combination of what they know and how they think while they're doing it. That is the most important piece. How you think while you're doing it. And it's not always going to be sunshine and roses, guys. You are going to have losses sometimes that are going to make you question why you even entered into this game. And then other days, it's going to feel like it's the easiest thing in the world. So it really depends on you. If you're wondering what's under the blue blanket, it is a tree for a bird to play on during the day. All right, yeah. Otherwise, I hope you've enjoyed. And I hope you have a great week. And I think from next week, we're going to start doing some real content. So enjoy.